Hi there. Good morning. My name is Victor Louis, and I'm the head of investments at Sankore Global Investments. This is your weekly financial markets roundoff. We start off in the US markets as usual, where stocks closed higher on Friday with the Dow posting a fresh record high as investors ended a volatile month on a high. The Dow was up 0.55%, the Nasdaq added 1.13%, while the S&P was up 1.01%. We saw the PCE index, which is essentially the Fed's preferred gauge for inflation, coming out on Friday, and it came out in line with expectation. We saw a 0.2% month-on-month rise and a 2.5% year-on-year increase. This was pretty much in line with what the market had expected. And obviously, given the recent data, there seems to be more evidence really of a soft landing, alluding to the fact that the Fed is not likely to ease rates aggressively, seeing as it's been able to sort of engineer that so-called soft landing where the economy is not crashing hard and it's not slowing down, very, very significantly. Now, if you look at the month of August, which was, quite a volatile month, for U.S. equities, nevertheless, the three major averages ended the month on a high. The S&P added 2.3% for the month. The Dow climbed about 1.8%, while the Nasdaq was up 0.7%. Now, the three major averages actually suffered very steep losses, at the beginning of the month, with the sell-off that we saw at the beginning of the month. The S&P had lost as much as 7.3% before recovering to notch its fourth straight winning month. The Dow and the Nasdaq were down as much as 5.4% and 10.7% respectively at their lows in the month of August. So this clearly highlights the level of volatility that we saw, in the month of August. Also, last week we saw Nvidia, which is now being described as a macro indicator, so to speak. We saw it put out its quarter two result yesterday with a 122% jump in revenues to about 30 billion. This was the fourth straight quarter of triple digits revenue growth, which is really, really significant. However, the company guided to somewhat of a slower growth come Q3, and also margins that were slightly below what market had expected. So in the aftermath of the guidance we saw, and also the release of the result, we saw the stock drop in the aftermath of that. But the stock is up about 150% year to date. Since the beginning of 2023, it's added anywhere around 750%. It also announced a 50 billion share buyback, which we believe would provide some medium to near term, strength, for the stock. A 50 billion, share buyback. It had announced one earlier on in the year, so this is the second one that we're seeing, and obviously, just continues to show confidence in the stock, particularly even by the management of the company. Now, for the remainder of the week, earnings is pretty much done. We still have a couple of results coming out, but the major results are out, and most of it is really out of the way. This week is essentially going to be some macro data. We have ISM manufacturing data that's going to come up, in the course of the week, and also job numbers will be coming out on Friday. That's the non-farm payrolls. That will be something to really look out for, particularly looking at the very strong revision that we saw the last time. It will be important to really then get a sense of how that labor market is truly faring, and this could prove crucial really in determining how hard the Fed could go. This could also have a major impact on at least near-term, market sentiment. So for the remainder of this week, really, we'll just be keeping an eye on that macro data to see what it turns out to be, and then be able to gauge and assess the impact on the US market. Over in Europe, inflation in the Eurozone fell to a 3-year low of 2.2%, similarly solidifying, that case for a September rate cut. The core rate, which excludes volatile items, fell to 2.8% in August from 2.9% in July, which was pretty much in line, with expectations. And this is coming on the heels, really, of fueled by the fact that we saw prices cool, price rises cooled in Germany to, unexpected 2%. Which, if you look at it on a Eurozone harmonized basis, it essentially just shows inflation kind of coming down in Germany. And Germany, obviously, is the largest economy in Europe. So with that moderation in inflation in Germany, obviously has a wider impact on the eurozone. The euro continued to slide against the sterling, obviously with the prospect of further rate cuts, and while it continued to kind of hold notch higher against the US dollar. Now the market has pretty much priced in that the ECB would lower rates by another 25 basis points at its meeting in September, after it started or it made the first rate reduction in June. Market is also pricing another 25 basis points before the year runs out. So between now and when the year runs out, market is essentially pricing in about 225 basis points reduction in the ECB rates. Over in Asia, over the weekend, China released its official PMI data for August. Manufacturing PMI fell to a 6-month low of 49.1, a faster contraction compared to the 49.4 that we had seen in July. However, the non-manufacturing PMI climbed to 50.3, up from 50.2 that we saw in July. Some of the key, data coming out this week within that region would be inflation from South Korea, Q2 GDP from Australia, and also data on pay and household spending from Japan that we'll see later on in the week. According to a report by Bloomberg, China is mulling, tinkering with the idea really of allowing homeowners refinance their mortgage up to $5.4 trillion, in mortgages. This, as far as we're concerned, is really going to have a muted impact on the housing crisis in China, because it really only just addresses existing homeowners. It really does nothing to address the dwindling demand that we've seen. It does nothing to address the financial state of the developers really in China. So while it's a laudable step, it will really do very little to address this very huge property situation, property crisis that we're seeing in China. Over in Nigeria here, the fixed income markets, for the month of August was really, really fueled by improved liquidity. We also saw very strong post-auction demand. All of that led to what you describe as a very bullish, month in the month of August. We saw 2 PMA auctions during the month where we saw a significant reduction, in the stock rate across all tenors. On average, yields at the T-bill market declined by about 134 basis points month on month. Sentiment was pretty much, the same at the bond markets, and this was really spurred by, the reduced offer at the bond auction, and also this sentiment around the fact that, we pretty much come to the end of the high rates that we've been seeing, basically spurred by, the last couple of auctions that we've seen, both primary market auction for treasury bills and also bond auctions where we've seen, rates come off or rates have been reduced to a large extent. In the bond market, yields on average across the curve declined by about 62 basis points. Also, we saw inflation, which basically broke a 19-month rising streak, really, with its first reduction in about 19 months to about 33.4%. In August. We also saw Q2 GDP coming, higher than the 2.98 that we had seen in Q1. It came in at 3.19%, continuing to show, some growth for the economy. For the remainder of the week, really, we've got the PMA auction happening on Wednesday. That would also be very indicative. It will give us an indication of where rates are likely headed in the medium term, particularly given the sort of reductions that we had seen in the last, previous auctions, particularly for the PMA and also the bond auction as well. So that's pretty much it in terms of the financial markets roundoff. We hope that you have a very, very productive week. Thank you very much.